this call down into like 4 basic parts. One, I'll just introduce myself and some of the mentors. Second, we'll break down what the mentorship program is about, how we'll be proceeding forward. In part three, we'll just explain what we expect from all of you guys. And part four, we'll just set some expectations of what to expect, not just from this mentorship, but also in the future. Yeah. Later on, you guys can ask me queries regarding the mentorship program. If we have even more time, then we can just fuck around and just talk about something general. That's fine. Okay, so I've been trading for around about 4 years now. I've tried my hand almost everything from scalping stocks, scalping indices, equity trading, swing trading. But currently, I've been sticking to exclusively trading Nifty and Bank Nifty options only. I sometimes move to futures, it depends. But this is what I'm up to right now. So buying or selling options on Nifty or Bank Nifty. I've been doing this for the past year, ever since the crash happened, because swing trades just became too unrealistic for me. So we've had our own journeys, and I've had to figure out what works best for me during these times. One reason why I trade mainly intraday is one, obviously I have the time. I'm a full-time trader. This is what I do. So I can sit in front of the screen and monitor the charts all day long. But most importantly, while I was swing trading or holding positions overnight, because of the wild moves, it was really affecting my health mentally. So I was checking money control every single second, every 5 minutes, checking what SGX was up to, what the Dow was doing. And that was just not the right way for me to proceed. So this is the reason why I've currently moved to intraday. Right? As far as trading goes, my trading is okay. It's nothing spectacular. But the other thing is I've made a lot of mistakes. So that's something that you all can learn from. So instead of listening to what I say about how you should trade or how you should invest, what's more important is when I tell you don't do something, I think that's pretty important. Don't do that then. Because I've probably made those exact same mistakes multiple times, which is why I'm telling this to you now. Okay. So moving on to the mentorship, we've structured the program in such a way so that it is fairly comprehensive. It covers both intraday trading, swing trading, and investing, right? And apart from that, we have broken the schedule down into small bits of sorts. So there is usually a 3-day or a 4-day gap between classes. So you have time to digest the information, go back, study on your own, and then ask doubts to your mentors, right? So you have specific channels for each mentor, and you can directly ask them questions if you want them to answer something. One thing to keep in mind is you will be learning swing trading, for example, from multiple people. Support and resistance is a very basic concept which will be explained by each and every single mentor. What you will realize pretty soon is every single person has a different way of interpreting everything in trading. There is no sacrosanct truth. There is no one thing which always works. There is no one method which is guaranteed to make you successful. The markets keep changing, conditions keep changing, and you have to adapt with it, right? So the their own perspective. We aren't here to spoon feed anything to you. We won't be giving out calls, obviously, and we won't really be telling you this is exactly how I trade. Although we might, but that's not the way you should approach it. What you should be looking at is, okay, this is how these guys trade. Okay, this is a new perspective. Maybe I can take some of these elements and try to make it mine. This can be fairly confusing to hear at first, but I like to use a sports analogy, right? So just take cricket, for example. Loads of people play cricket. Especially in India, you have multiple people across all levels who play cricket. But how many actually make money from playing cricket? Very, very few. It's the same thing here in trading. You keep hearing these things about how 98% of traders lose money in the markets or they end up failing somehow or the other. And it's just a very small percentage of people who actually succeed in the end. Now, what happens at the pro level is of any sport, you don't really have two Virat Kohlis. You don't really have two batsmen who bat the exact same way or two bowlers who bowl the exact same way, because it's just not the way it works. You will eventually have to figure out your own way of trading, and it will be different from what any of us tell you. What we can help you do as mentors is to try to establish some basic foundations, give you guys the rules, a basic framework, and then you can play within those rules. So we'll basically explain the rules of cricket, which you should always follow. But then what shot you should play at this particular time, that will depend on you, and it will differ from what you play to compare to what I play. Okay, so I think that's fairly straightforward, but this is pretty important to understand. We will all trade differently at the end. By the end, I mean when we're profitable, right? Now, coming to part three, which is what we expect from you guys. The most important thing we hope for is activity. We would really appreciate if you guys showed initiative because that's what we feed off of, right? So the mentors, especially we, these guys are here. They're very willing to spend their time and give it to you, and we're very thankful for it, obviously. But you have to take the initiative. You have to ask them questions. You have to make them feel like you understand what they're saying, and they aren't just preaching to a group of random people who might or might not pay attention to what they're saying. So pay attention, ask as many questions as you can, and even amongst each other, be helpful, help each other out. If somebody is asking a noob question, instead of making fun of him, actually take the time to explain something. You guys have this channel here, you guys have the Discord server. You can always stream something, something extremely basic to somebody. If somebody doesn't understand how volatility affects or Wix affects the option prices when he's selling an option, you can maybe just open your charts, stream something, and explain this simple concept to that guy, right? Apart from that, you don't have to be serious. This isn't really a very formal method because the subject itself, at least according to me, economics is pretty dry. It can get fairly repetitive because the same things keep happening over and over again. So I think it's important to have fun with it and enjoy the process. So if you guys are sharing memes or making jokes or having fun, I mean, as long as it keeps you interested, uh, that's that's what we would like to see from you guys, right? Any questions so far? Any of you?
No, thanks.
No, it's clear.
No, I don't think so.
No question. Thank you.
Yeah, just a
Okay,
quick
so you
question.
guys have. Mhm.
So you said that you've been like trading for 4 days, and that now you're like sort of doing this full time. So how long have you been doing this full time? So do you mean you've been trading for 4 years full time, or 4 years like in total, and then sometime full time?
So 4 years in total, 2 years full time.
Oh, okay, okay, great.
Yeah.
Actually, I have one question.
Hmm.
Okay, so about what percentage of the effect on the market does FNO contribute? Like, does the cash market drive away the prices or the actual FNO market?
No, that's not the way it's supposed to look at the question anyway. What moves the market is what fundamentals add to positions. These are the two main factors which push the market. What the overall fundamentals are saying. These involve this include news and laws and what the current market conditions are and everything. The second is what the big boys are doing, what the institutions are doing. If their positions become too over leveraged, the markets will swing in the opposite direction. These guys have the capability to move the markets, especially if something happens to all of them, which is why all these major crashes happen when the banking sector fails or you have an NBFC crisis, something of that sort. Those are the two things which move the market. So whether the money is coming through the cash segment or the FNO segment, it doesn't really matter. The root of the problem is the fundamentals and the positions of the investors, right?
Yes, understood. So, how do you define a big guy? Like, what is the criteria to be an HNI client?
So HRI doesn't really matter. I mean, all of us probably have some money in the bank. If we all pool up, if we all sell our houses and sell our businesses and then buy Nifty, we'll probably move it by like 10 points. So whether you're a high net worth client or something, it doesn't really matter. It's institutions you have to look out for, what the mutual fund houses are doing, what these hedge funds are doing, what the central banks are doing around the world. Those guys move the markets. Yeah.
Understood. Thank you.
Yeah. So
You
it can be
said
confusing because you keep hearing stuff like 70% of the volume provided in the markets is by high frequency trading algorithms, especially in the US and in other countries. So while that is true, those aren't really moving the market despite 70% of the trades being executed by them. Yeah.
Okay.
yeah. So you said that you switched from holding overnight positions to intraday, right? So which do
Yeah.
you think was more profitable as such?
More profitable. Swing trading was more profitable for me. But yeah, I think now that I've been intraday trading for a while, I'm actually exceeding that number. But then it's a small
Oh,
sample size, right?
yeah, yeah,
1 year. Yeah. So 1 year is nothing.
I get it.
Yeah. So you can judge your profitability based on your returns, basically. So probably give you around 7 to 10% depending on the year or whatever the market conditions are.
Yeah.
And the only drawback is that your money is kind of locked up, but you are still making those returns. Then at level 3, you probably have your mutual funds. You can give your money to your Yes Bank guy or whatever branch manager you have, and he can probably give you 12% returns a year. Right there, you do have a lock-in period, but that's still okay. That's still zero effort from your part to grow your money and beat inflation. Then you have, then over that you probably have stock picking, or no, not stock picking. You could probably have mutual funds. By mutual funds, in this case, I mean selecting through mutual funds. For example, maybe you have one large cap fund, one mid cap fund, and one small cap fund. Right? Let's just keep this a very simple example. So let's say you have these 3 funds, and all you're doing is at the end of every month, suppose the small cap index has fallen by 60%. Whatever SIP you're doing, you put in this month's money into that fund. Right? So it's still pretty brainless, but you are averaging out. So wherever the good prices are, you are picking those shares up every single month. If you do something of this sort, you should probably average around 18 to 20%. Or this also includes, going through mutual funds and then picking up mutual funds which might be slightly undervalued, or mutual funds which you expect to perform well because of X factor. You can probably average 20% returns per year this way. And again, this requires minimal effort. Now, if you are stock picking, by stock picking, you are putting in more effort now. You are going through annual reports of multiple companies. You are keeping tracks of when the quarterly reports are out. So if you are stock picking, you should probably average around 25% returns a year. Otherwise, it doesn't really make sense. Right? And now when it comes to trading, if you're swing trading, then 30% should be your goal. And if you are trading intraday, I think it should be around 35%, because otherwise you can save your time and money by doing other factors. So for loads of people, it might be better to, take up a high paying job and entrust all their money to a mutual fund manager, because that will give them 15% and they will increase their earning power by working. So this is how you can differentiate the various levels of sorts.
Okay, so 30% you said, is that after like all the brokerage and all of that, or is it
Yeah,
after?
yeah,
Okay.
excluding charges. Yeah, that's the value you're getting for your time, right?
Yeah.
Very clear correlation.
Yeah.
Yeah.
It's not after taxes by any chance, right?
Hmm?
Yeah, I mean, I just wanted to know if it is after taxes as well.
After taxes, after everything,
Okay.
your net returns. Yeah.
Okay, Energizer, sir. Everyone's been hearing about the bull run. But currently at Nifty at 15,000, is it too late to join the bull runs?
No,
So,
I mean, how can you predict the tops and the bottom? Did anybody predict the bottom at when Nifty was at 7,500?
no,
If you were
generally
part of
the
the sub
bull
at
run
that time, I
happens.
think all of us had. I think all of us at that time had 6,000 PE puts. We had all bought those puts and we were just sitting there, and all of us got wrecked and lost like a ton of money. You can't predict tops and bottoms. So all you know is you're currently in a bull run. There might be minor corrections going on, but until the trend completely changes, you are still in a bull market, and you have no idea when the markets will stop.
So basically,
Thinking you can figure that out is probably
better to invest a small amount in every dip that occurs, right?
yeah. So you can either go for tranches, or I think what's best for most people, especially beginners, is at the SIP method. Just have a fixed sum every month that you do save, and the first thing you do from a salary is you put it into your investment account. So you have 20K to play around with every single month. Do what you can.
Okay. Do SIPs have a lock-in period?
I mean, by SIPs, I mean you can just do it yourself, right? If you have the ability to go through balance sheets and pick through stocks, every month you have 20K to play around with. Today, I think Reliance is at a good price. Reliance was at 1,900 earlier, so I put in some money in Reliance this month.
Okay,
right?
Understood. Thank you.
Yeah, so you can make your own SIPs in a way.
Did you take the decision to do this full time on the basis of the profitability numbers you were hitting, the size of the investment account, or a combination of both? Just as how did you arrive at that decision?
Yeah, enough to run my household. Yeah, that was when I said, okay, this is it.
How old are you? Like, not the name or anything, just asking.
I'm turning 30 soon. Yeah.
Okay, yeah.
Hi. So I was just wondering, what is the kind of financial literacy you're trying to achieve or trying to hope that this group gets?
I don't really have goals of that sort. I don't think I'm qualified to answer that question properly, man. I mean, as long as you guys know that keeping your money in a bank account won't get you rich, I'm happy. Especially, so I basically look at my parents and their friends and everyone, and they're all in their 50s and 60s now. And even for the kids' weddings and stuff, they are taking out loans at this stage. So as long as you guys aren't doing that, by the time you're 50, you have savings set up, you have something to depend on, you know, that'll be amazing. Small goals.
When to do profit booking?
When to do profit booking? Great question. Never. You have to let your winners run. It depends on what your timeline is, but a general rule of thumb is if you are in a profitable position, don't exit your trades, right? Let your profits run for as long as you can let them. Cut your losses short.
I often
So
had
imagine.
yeah.
So imagine if when Nifty was at 7,500, I'd bought like a future, and I had futures, but then I sold them off. Imagine if I'd if I was still holding on to them, right?
Yeah.
Yeah.
I
Guys,
often
give me a
have
second. I'm getting another call. I'll get back in 1 minute. Sorry.
How old are people over here mostly? As in, just be.
I'm 21.
I'm 22.
23.
Yeah, I guess
Anyone
20
over?
to 25 is the.
I'm 24.
I'm 19.
20.
I see.
Yeah, I'm also 20.
I think I'm 25. I'm probably the oldest after Energizer over here. Fuck.
Nope,
I'm
you're
also
not. I'm
27.
29.
Oh wow,
I'm
that's good to hear.
28. I'm
Okay,
almost turning 29.
okay.
I am 31.
Okay, before we move on to more questions, please let me just re-emphasize the fact of how important your role is. We've been conducting the mentorship programs for a year, but the quality has varied widely. One, obviously, we aren't like some pro educators or something. This is something we've all picked up in a way. And we've always gotten the best results when everybody has been open, they've been active, they've been asking questions, they've been, understanding us, critiquing the mentors themselves, having a connection of this sort. So if that is possible, then we can do great things. However, if people are aloof, people really don't really have any interaction, the the server is basically dead most of the time, nobody's asking questions, then even the mentors lose interest. And that's when you can see like dates being delayed or classes being pushed away, which just enhances the cycle. But if you guys are active and asking questions regularly, the mentors themselves will look forward to their sessions because they want to teach you. They've volunteered here. They are willing to give you their time. Now, just based on your participation and how you guys interact with them, this is something extremely important. Now, the mentors, all of them are fucking amazing. They've all been doing this for a while. They've all got experience. They've all made shitloads of money in the markets. I'm talking about the other guys. And it's very important you guys pay attention to what they have to say. Like people like Lumia Man especially, these guys have so much knowledge. They can probably give you a strategy. They can probably explain something in 1 hour which would otherwise take you a year to understand. And they could clear it all up in 1 hour. And I know these guys, if the session is supposed to be for half an hour, they'll give you guys an extra 1 hour answering all your queries if you guys show interest. Yeah. So something like this call where you guys are asking questions, that'll be amazing. Okay. You guys can ask me anything.
Yeah,
Will
so
we
you
be
were
taking?
yeah,
Yeah,
you
I'll
said
go.
cut your losses as quickly as possible.
Mm-hmm.
So this one time in the correction, I sold off my shares because it was in loss, I think. But the next day it bounced back to the same level. So that was, you know,
Psychology, but I'll just explain this right now. So this is the basic mindset of a trader, of a beginner, especially. What happens with them is they enter a nifty trade, right? They've bought something and now they are long. The market goes up by 40 points and they have some sizable profit. Okay. Now the next candle is red and their profit comes down to 10 points. What most beginner traders do is they let the emotion fear get to them and they will exit. They'll have all these maxims playing in their head, Nobody ever went broke by booking a profit. At least I'm making $10 right now. At least I'm making some money right now. Let me just book this. Let me just close this position and book this profits. Let me move on. And the inverse happens when they're losing money. So they bought a nifty option and it immediately tanked. It immediately fell down by 40 points. In this case, do they exit? No. That's when they become hopeful. That's when greed kicks in. You know what? The next candle will be a bullish green candle. It'll reverse from here. Something crazy will happen now and I'll be in a profit. When I become in profit, I'll exit then. So this is the basic mindset a beginner has. You have to flip the script around on this. This is exactly the kind of problems people face in trading because it can be very counterintuitive. When you are in a profit, your trade works, it went up by 40, now you're at 10. That's when you should be greedy. That's when you should be hopeful that the markets will keep moving in your favor and something great will happen. Because let's not fool ourselves. Nobody has the ability to perfectly read the charts. We have no idea what the next candle will do or what will happen in the next half an hour. All we are basing our trades on is probability. Even your strategies, even the best fully formed ones, just have a probability of success. There is no guarantees in this game. So when your trade is in a profit, just recollect your premise, understand exactly why you entered your particular trade and hold on. Be greedy then. And once you enter a position and the trade isn't performing the way you did, if it falls down by 40 points, that's when you're supposed to exit your position. That's when you should be fearful. Make sense? In a very general manner?
yes, sir.
Energizer is fine.
Energizer, one question here. So when you the stop loss, is it some percentage or you will only exit whatever you have decided gets reversed?
Can you please repeat your question?
No, I'm saying whether do you have a stop loss as a percentage or like say 10% stop loss or 3% stop loss, or
Okay.
you would exit if the market completely reverses from your idea?
Okay, so I don't set my stop losses based on a percentage of my capital. I take my trades based on the fact that because the markets don't care about my stop loss, right? I enter Nifty at 15,000. I go long. I have a stop loss at 14,900. The market doesn't care about it. So, and the markets can hit my stop loss and then the trade can perform. So, what's the point of my stop loss? That isn't a stop loss. That's just a maximum pain threshold. So, that isn't a stop loss. If it's just a percentage of a capital or a percentage of the amount of money you're willing to lose on a trade, that is just your maximum pain level. Don't call that a stop loss. A stop loss is supposed to be a point where you now know the trade won't perform. So, this is what should happen. If your stop loss is hit 8 out of 10 times, the trade shouldn't work. That's when you know you have a good stop loss. So my stop loss are basically set around swing levels or pivot points, something of that sort, or whatever point I think from here, if the markets touch this level, then it'll probably fall down even further and I'm long. So let me just exit here. Make sense?
Yes, thank you.
Yeah, I had another question. What kind of pre-reading before a session would you recommend?
Pre-reading, I mean, I don't really do a lot of pre-reading. All I do is
No,
the day
I
before,
mean, read before each mentorship session.
before every mentorship, nothing. Just be alert. That's it. Yeah,
Okay, sure.
nothing. Yeah. So if you don't understand something during the mentorship call, like Sexyribbon is explaining indicators, he will probably delve into RSI, Fibonacci, and all those indicators, right? Because he's an expert at them, especially. So if you don't understand something, so maybe he's talking about uh, some moving averages, but it's very advanced. Maybe he's talking about combining exponential and simple or something. If you don't know what those words mean, it's on you to record that session, go back, Google it separately, and understand what he meant. So all your work basically starts at the end. And you can always ask your fellow buddies for help, yeah?
Okay, sure.
Mhm.
So Energizer, you said that look out for the big guys, right?
Mhm.
So like I tried to understand the business model, but I couldn't really understand what they actually do. Like I tried mimicking high frequency traders, but basically I ended up with a lot of charges at the end of the day. Even with like I ran a few trades, and at the end of the day I was like in 1,000 rupees profit, like based on Zerodha. But
Mhm.
I ended up with like 5,000 rupees charges on that. So, like, how do these people earn money? Like, what do they? What is their business model for hedge funds and high
Dragonweed, you
frequency
talked
trading?
about. I mean, they're just looking for any opportunities they can find or manufacture. That's it. So, for example, I think the GME thing is very well known now, right? Do you know what happened with GME, right? GameStop.
Yeah, yeah. So they basically had a naked short position, right? Melvin Capital.
They did have a naked. They did have a naked position, but they had short positions. Yeah. So they identified a company which they thought was going bankrupt, right? It wasn't really going bankrupt; it was just declining. But these guys put in so much money in shorts that they were trying to force the company down, right? And once the company would go down to sufficient level, they would exit and make some money. So all these guys have to do is just they try to beat the markets, but most of these hedge funds fail. It's pretty hard to find a hedge fund which actually beats the markets for a span of 15 years. Hmm.
So
Institutions, I mean, yeah, they all have their own roles. I mean, you have banks all around the world whose job it is to monitor currency. So a volatile currency is bad. If my 1 rupee can buy me an iPad today and then a loaf of bread tomorrow, that's not really a valid currency. So some banks are just focused on keeping the currency rates level. So the Indian rupee should hover around 70 to 80 or whatever range they set, and they will pump in money, pump out money, buy some bonds based on all these factors, based on export and import, stuff like that. So the Chinese, that's why they have so many US dollars, right? Because they import a lot from they export a lot to the US, but they import barely anything. So they have all these dollars lying around. What they do with those dollars is they keep buying all these bonds, all these government bonds from the US Treasury. So this is what their one bank's job is. They all have multiple roles. But yeah, at the end of the day, for most hedge funds, it's just to make profit any way possible. Hmm.
Okay, so talking about these institutions, generally speaking, who makes more money, the FIIs or DIIs?
There's nothing of that sort.
So if we have to replicate, uh, whom do we replicate? Because they are opposite, right? Completely opposite. When one buys, the other sells,
No,
and
there's
vice
nothing of
versa.
that sort.
So they can both buy at the same time.
Yeah.
Okay. Okay, fine.
Yeah. Over here, you just have to look at the general market conditions. Why have the FIIs been buying? Why have they been buying? Are they bullish on India or is there something else at play?
They are
What
bullish on
happened to
India.
US? They're bullish on India. No, not really. They don't really care.
They're probably hedging against dollar depreciation, which can very likely
Okay,
happen.
that is still, big brain time, but something simpler, an easy
Di-
explanation. It's usually the simplest
diversification,
explanations which work, by the way.
like we are
Diversification, yeah,
growing
not
it.
really
Are
that
at
much.
all-time high.
They're getting loans for free, man. They're getting loans for free.
They're simply
That's
printing
it.
away dollars.
Yeah, so they are getting loans for free. They're getting free money. They're putting it into India. They'll buy some stocks. They'll hedge them properly, and then they'll pull it out. It's just an arbitrage for them at this point. So if they get loans for nothing, and then they invest it in Indian stocks or Indian bonds or something, they'll get a return. They're paying nothing. They're getting the money for free. So they'll keep pouring in money until it's free. Mm.
Energizer, would
Hopefully
you
they
have bought
invested.
GameStop
At 40, yes.
now? Would you buy it now?
No, not now. Not at these levels. At $40, yes.
But do you still
Because
believe that there's a short squeeze that's going to happen?
I'm not sure. Not qualified to answer that question. Yeah. Hmm. All I do know is that the company's management has changed. and then I went to look at the financials. So with the recent management change, with a new focus on e-commerce, with the way video games especially Hmm? Abhi, I just explained, right? It's based on the amount of work you put into it. For example, if you're making 20% from swing trading, right? Why go through all that effort? Why monitor the charts all day long? Instead, what you could do is every weekend you could just look at what mutual funds are doing, how the mutual funds are performing, and just put in some money there. You'll make 20% that way. So why put in all this effort? You get it?
Yeah, makes sense.
Yeah. If I'm generating like 10% a year intraday, what's the point? Just put my money in Nifty, right? I'm getting the same returns risk free, and I can use the time I save from intraday trading on maybe learning getting a job or something else.
So you meant at least 30% of it. So as
Yeah.
to beat them at least.
Yeah, but obviously this doesn't apply to beginners, right? If you are starting off, then obviously you're not going to be an expert in 1 year, even though that could be a goal. Some people who achieve it. I didn't. I faced heavy losses in my first couple of years. But yeah, maybe you're smarter than I am, so it could be possible. But in the beginning, which is why I always advise people to not take risks, to not go over one lot unless they're profitable. So the only time you actually move up to 2 lots is not based on the amount of money you make, but based on how your capital has grown, how many trades you've taken, by properly analyzing your trade book. That's how you move up to 2 lots. So even if your capital is 10 lakh rupees or 1 lakh rupees, if you're a beginner, start off with 1 lot and don't increase until you make money in the markets. Because patience pays, I think. No matter how much anybody helps you, the only way to actually make money in the markets is through experience. Through the mentorship program, we're hoping to cut that time short. But yeah, your main teacher will always be experience, and your subconscious will keep understanding charts better. It'll just keep understanding patterns better, which is why you can see some of the expert traders on ISBs telling you, okay, BNF might just fall down now, and then exactly that thing happens. That's not some magic, but it's just based on the subconscious just has so much information now that can recognize patterns. Similar to chess in that aspect. It's pattern recognition.
So I
So
have
you
a
need
question here.
experience. Hmm.
When you were doing swing trading, what was your average holding period?
Around 1 week, I guess.
Thank you.
Yeah.
Okay, so Energizer, can you like share your initial journey, how you kept going in spite of making losses?
I mean, yeah. So I learned about the markets through my brother. Actually, he was playing GTA or something, and I think you guys know about GTA 5, right? So you can go around, shoot people, kill people, and do all this stuff. But if you want to make money in the game, you have to go to some stock market, kill like some CEO, and then buy shares. So that was what initially got me interested in the markets. That in a game where anything is possible, the best way to make money is still through the stock market. So I thought there might be something here. That's when I started reading about investing. So I invested for a couple of years, read quite a few books on investing, and then found out about FNO and futures and options trading. But luckily, I had that foundation set. Luckily, I didn't even know about FNO before, in my initial 2 years of my journey in the market, since all I knew was investing. So all I was doing is making sure my fundamentals were strong. I know how to read a balance sheet now. So I'm a good investor. And I didn't really have that greed set in initially. So when I started trading, I knew this is something that I probably want to make a career out of, mainly because I enjoy the process of trading, which is why I don't mind having this call with you guys, spending my time with you guys, because this is something I truly enjoy. I enjoy trading. I like talking about the markets. Economics interests me. So I have fun doing this. Plus it was a career which, hopefully I can take with me. I'm not really confined to like a fixed desk job. I can be in any part of the world. I can be in Brazil if I wanted to and still trade and still earn like some sort of living. So keeping all that in mind, that helped me go through the losses. I understood that it's a process, that you probably will lose money. And yeah, didn't give up. That's where most of my friends whom I started off with fell off. It's not that you
quit your job after you
Mhm.
started increasing your salary, or you quit your job before itself and then you focus completely on trading?
No, I quit my job, but I'm crazy and that's not recommended.
Would you
Yeah.
recommend any of those books on investing?
Yeah, I mean the basics. Read the book by Benjamin Graham, Securities Analysis, The Intelligent Investor. You can go read books by hedge fund managers as well. Uh, there are a few by the Little Book series that gives you quite the basics on what the different avenues are. So there are different types to investing, right? There is understanding how to read a balance sheet, how to find frauds, how to understand the story of a company, how a company builds its moat, understanding what goes into identifying those, understanding what cyclical industries are. So there's quite a lot that goes into investing. So you can read a book, a very general book, and then you can pick up something deeper. And if there is a certain aspect of trading or investing that you want to book on, you can let me know and I'll recommend it. But generally, yeah, just stick to the intelligent investor, security analysis books, which have stood the test of time. Those are all right. Mm.
Can anyone hear him? I think we lost him,
Yeah,
right?
Yeah.
I'm here. I'm here. Any other questions, or should we wrap this up?
Yeah. Just
Uh, so experience will teach you everything. One, you have to keep an eye on how much money you have, how much money you're willing to risk. If it's something that will enable you to actually enter F&O properly, it's not. It shouldn't be an amount where if you have a bad month, you can blow it all away. And it depends on you how well you think you are prepared for. But you should know the basics. You should know what all the Greeks are. You should have gone through varsity and or at least done their quizzes so you understand. You have a basic foundation, and then you can start off, man. Just start off small, keep learning, keep growing. Yeah, fairly simple.
So, how much do you think the books like Intelligent Investor are valuable today? Because they talk about P's in tens and fifteens, and now we are seeing P's in 500s and thousands and thoughts.
Yeah, but that doesn't really matter. So when it comes to the PE ratios, you've got to understand that those books talk about a different kind of investing. They talk about value investing, right? So especially in those days, what Benjamin Graham focused on was finding companies at values lower than what their fair price was, and whether the company performed well or went bankrupt, he would make money, right? So just giving you an extreme example, this is how Warren Buffett made his first few millions. He would buy a steel factory, right? What he would do, what he would analyze is how much land does this company own? What's the price of all the machinery? And if they went bankrupt right now, what is their worth? Suppose the number comes out to be, 10 US dollars per share when the company is bankrupt. And currently it's trading at $9. So Warren Buffett would just buy that company. And now if the company went bankrupt, he would still make a profit because the fair price was 10. But if the company performed well, then he had a chance to, make a shit ton of money because he got it at such a good price. And if the markets correctly, if the company performed well and their share price reached 100, he's made 10 times his money. Stuff like that.
So,
So it talks about value investing. Right now, what most people focus on is growth investing. Value investing, these opportunities have become harder and harder to find to the point where they're practically non-existent. So people right now, they don't really mind buying companies at high PEs or at high prices as long as they think that they have value that they can scale up. This trend has mainly arisen due to all the tech companies because their scalability is so much higher. So earlier, if you have railroads, I have a rail track and I have a railway running. If I want to increase my profitability, I would have to lay double the railroad lines. I would have to double the number of trains I have, and they would have to be on routes which made the same amount of money or had the same amount of traffic. And eventually, despite all the money in the world, I would still reach a point where there would be no more railway track left for me. So there's an upper limit, there's a ceiling as well there. However, when tech companies came around, Facebook is currently making Amazon is currently making $10 per year. Next year, they can maybe one more dollar and make $30. The scale.
Good age to start investing or trading if you want to make trading as a career?
I mean, you've got to figure it out for yourself, man. I wouldn't really recommend making this a career because most people around me haven't really been able to do so, despite being much smarter and everything. Plus, life can be weird, especially if you have families and stuff. Trading can be extremely volatile and risky. So you have to figure out if you want to make this a career. What you should be focused on right now is just understanding as much as possible, just learning as much as possible, and just taking it day by day. Just get every day. Make sure you take your trades properly. Make sure you have a set of rules ready which you stick by, and then just play within those rules. You know? That will be very important. I don't think it's the end goal right now. Get better, and then you will see.
Your connection was really poor. Can you please repeat the last line you said?
I don't remember. Yeah, not reading off a script, so I don't know what I was saying. If you remind me,
Yeah,
I
I
can probably
got the
tell
gist
you.
of it. Thanks.
Would the mentors disclose their positions and their strategy on the next day
They could if you
without
ask them.
deeming it as financial advice?
You could if they will if you ask them. Yeah.
Okay.
In a couple of my mentorship sessions, it's been so informal that I was sharing basically every position with them. In another session with CPP, Java, and all these guys, I was giving them calls. So it depends on how the session progresses, right?
Right.
Yeah.
Will you be willing to do a live trading session with us? Like, talk to us while
I
you're
don't
trading so
have
we can
the
understand.
I don't have the internet capacity to stream and show my screen. I've tried this earlier on YouTube. Yeah, but my internet connection just gives
Oh,
away. Yeah, I don't stay in a city. I stay in like a tier 3, tier 4 town. So yeah.
oh. Is any of the other mentors willing to do that?
If you ask them, yeah, why not?
Okay, sure.
Zoom
And
will give like a shit ton of calls. He may make a guy made 60 something
it's
in a month
breaking.
by
Can you
reading
break?
and then just taking trades.
And as I say, you're breaking.
If you ask your mentors, I'm sure they'll oblige. That's
Okay. Okay. And plans to list ISB by any chance?
all. No. I mean, we had no goals when this started off, right? When the mentorship program started off, we had probably 1,000 members. We had no idea it would actually grow to be anything. But yeah, let's see.
So just out of curiosity, you mentioned that hedge funds, most of the hedge funds don't live for more than 15 years or so. So they have all the analysts in the world, all the big talents. They have all the risk managements, but they still fail. So how do, as an individual trader, you intend to survive for more than 15 years?
Okay, so you can Google this. There are various drawbacks mutual fund houses have that you don't. So, for example, if you're bullish on Reliance, you can use all your money and buy a call. Hedge funds can't do that, right? You can take on crazy risks. You can diversify your portfolio. If your portfolio is down 20%, but you still believe in your portfolio, you can hold on, right? Who's stopping you? During the March crash, my portfolio was down 20%. I still held on. Mutual fund houses can't do that because they have quarterly reviews. And I can hold on to a stock for 10 years without it performing. Mutual fund houses can't do that because somebody will, every quarter, they have meetings, they report to someone, they have a job. So they have to tell people, why are you still holding on to this company? You're wasting my money, utilize this cash elsewhere. So they have various drawbacks with them. So yeah, I can give you an example. So I recently took a trade on Burger King, which I told some of the guys on ISB. I think it was during a mentorship session. So remember when Burger King was listed and it performed extremely well. I think it went up 100% on its first day or something crazy. I think 10%, 20% or something of that sort. So the day after that, I took a long position in Burger King and I shorted Jubilant Foodworks, right? And it worked pretty well. Burger King went up by 10%. and Jubilant Foodworks dropped down by 3%. And it was a fairly simple trade. So what would happen is the mutual fund guys, they would be questioned by their boss. Oh, hey, Burger King just had a bumper opening. Do we have any Burger King? Because it went up by so much. And the guy wouldn't really want to tell his boss that, no, we don't have any Burger King. So just to balance his portfolio, there would be loads of fund managers pressured by the boss to sell off some Jubilant Foodworks, sell off some Domino's, and just buy some token shares of Burger King, just so they can tell their bosses that, yes, we have some amount. You know? So they have a lot of drawbacks. You can Google this, you'll find that entire articles on the way mutual fund houses are hamstrung. Yeah, which is why Warren Buffett doesn't really have his own mutual fund house. Because why would he? Too many rules.
I have a question regarding what you said right now. So yeah, basically, you talk about fundamental investing, right? And Burger King is a very, very, very bad option for fundamental investing. So, what would you have?
That was a
what would you
one-day
have
trade.
done? What would you have done if your trade went to shit, like hit lower circuit or something like that?
I mean, if the trade didn't perform, I would exit. What's the problem there?
Because it's better if you take like a fundamentally strong stock and hold on to it while trading, right? Taking a swing trade also.
I think what he meant was
Yeah, but I was trading intraday. My
Burger
trades are
King was a
intraday, right? Burger King was
momentum
recent.
play of sorts. Sorry.
Yeah, so currently all my trades get closed automatically by 3:20. So
Don't you have to pay a fee for that? Automatic squaring off?
no, Robbie, you have Rio's automatic square off at 3:25, right?
Yeah, yeah.
And they charge you extra for that shit. So I just close all my positions at 3:20 regardless of what it is, where it is. Yeah, just a rule.
Do you trade only on the domestic bourses or do you trade internationally as well?
No, I can.
Didn't catch a word of that.
What?
Yeah, didn't catch a word of that.
Oh, I just trade Nifty at Back Nifty. That's it.
Oh, okay.
Yeah.
Easy to track smaller and fewer numbers of tickers, I guess.
Yeah. So I can't monitor multiple charts. I have a problem. I don't have that attention span. I don't have the brain size to, evaluate 5 different charts and then take trades. I just look at 2 charts and that's all I can focus on.
Excellent.
Anything
There
more
is
mind
hope for people
gets,
like me.
gets cluttered.
Excellent.
Yeah,
There
I
is
know
hope for
like
people.
buddies of mine who have like double screens, who are looking at like 10 charts at once, especially for Bank Nifty. Yeah, I know
Yeah.
a couple of people who've made like converted 10 lakh accounts to 40 lakhs in ISB.
Wow.
And they've done it by monitoring each and every Bank Nifty stock and trading on Bank Nifty. So they look at all the trade on Bank Nifty only. Yeah.
Wouldn't the cost of all those monitors outweigh the profits that you're likely to make then?
Would the cost of what?
No, very bad joke. Ignore.
Okay, ठीक है. Chalo guys, I'm tired now. ठीक है. Hopefully you guys have had an idea of what is about to come. All the best. Thank you for your time. Bye bye.
Chemse,
Thanks a lot.
are you still
Thank
an
you.
option seller or a buyer? He ran away.
भैया मैं करता हूँ ऑप्शन सेल
अरे नहीं, that was more of a insider thing. छोड़ो.